Reviewing the videos of my own trading really got me to see my blind spots pretty quickly. But just working across different markets and not knowing what strategy overall to trade, that's what really kind of slowed me down a bit more over time.
Welcome back everyone. Today I'm sitting down with Andres Granger. Looking forward to talk about his crypto trading, crypto fund, and his experience trading in Korea. So Andres, welcome to the podcast. Good to have you here.
Well, thanks a lot for having me. This is kind of a big goal of mine to, be on the show. I have actually watched it for a few years, and you just have an amazing cast of traders that you've had on. So it's like, a big step to be able to, join you today and have a chat here on my floor gang. By the way, I'm out in Asia, and I've fully taken on the life of crouching and sitting on the floor at the end of the night, just, when all work is done. I can't sit in a desk for so long. My legs get so cramped up. But it's many years of living out here, South Korea. And I know that you are also a world traveler, constantly traveling around and trading. And I mean, that's a big part of why I always like trading. But can I ask you where around the world you are right now?
I'm in Thailand, actually.
I haven't been there since before COVID. I know I should go back, but still on my list, even before going back to Thailand, I have to go back to Taiwan. It's been a while to be there, and that's definitely one of my favorite places out in Asia.
So let's go back in time a bit. Tell me more about kind of how you began trading and what was your first experience with trading and how did it go from the start?
Well, I would say my very, very first experience was coming out of college and more on the investment side. I tried to do a little bit of trading, but it was, to me, I would say it was swing trading. But now looking back at it, it was full investment because I was, involved for a year to 2 years at a time until I would change positions around. So it was a lot more of an investment style. But really getting into trading, it came basically when I'm out here working, just, living normal life, and along comes a really great opportunity. Turns out that opportunity was basically a Ponzi scheme. Now, what the offer really was that, we have this, in-house trader, and the guy's really great. He does futures and options, and the average return could be between 3 to 4% a month. And it's like, oh, wow, that sounds great. And starting off, that's what, I was able to make from this in the first, handful of months. And after you get a little bit comfortable and you start oh, wow, something's really working here, then it's that's when, okay, everyone does the bank run on whatever money is actually in the thing. And then the whole thing goes up in smoke. So anyway, during that time, I kind of got a little bit more interested in trading before knowing that it was kind of turned out to be a scam or whatever it was. Even we haven't figured that out all these years later, and that was 2014. But it got me interested a bit more in trading. I started trading on my own. And from there, I went through every kind of market and every kind of strategy, obviously starting with technical analysis and Forex in the beginning, and which is kind of funny because still in some ways use those today. And for the fund as well, we are connected to all kinds of different markets. We do things in obviously futures options and also on the Forex, some on the stocks, but a bit more on the Forex where we have to hedge for our clients that are spread around the world. So we're always, making some markets in whatever denomination we need at the time. So we have a little bit of a hand in that.
So how did you go from getting out of that Ponzi scheme to then going to create a fund? Was it a long period of time, or how did you go from there?
Wow, those two things in the same sentence, then it makes me feel it brings back bad memories of that, and then thinking that was a fund, but nah. That was big nightmare that happened. I start going out on my own, start to trade on my own, and think oh, okay, if I lost all this money, from someone else's bad trading, who knows, then I might as well do it for myself if I'm going to lose my own money. From there, I basically took the next 3 years on my own, was barely profitable, if not just break even, after my first 3 years of learning, studying, trying different things, trying different markets. I was getting more of a feel for it. Definitely didn't fully know what I was doing at the time. I was able to get a little help from a professional, and that helped in ways where I was, kind of almost like more of an apprenticeship in some ways for trading, where I was helped along the way over a 2-year period. And by doing that, checking my trades, checking how things are going, it also made me kind of own up to issues that I had on my side. And if I wasn't being disciplined with certain trades or certain positions that I had, from that, basically learning about a lot of different professional styles of trading and how professionals actually trade in comparison to just the idea of, oh, I'm going to call a direction. I'm predicting that the market's either going to go up or down, and to say that, oh, there's other ways that you can actually trade, which are non-directional, basically. And you don't have to pick a direction. You just have to try to follow this basic strategy and have good execution to make it actually work for you. So I really got into the field of market neutral trades and spread trading, and that's basically what I do now. Over the last year, there's been some wild stuff out there in the markets, and people have had a large drawdown in many other funds, and it's definitely due to our market neutral style that we've been able to keep our head above water and kind of outperform some of the other competitors, but basically just make a good return or a decent return for our clients overall.
Tell me more about this. So a lot of people are trying to predict the next move in the market. Like, they want to know where the S&P will go, and they predict that, and they want to make money off that. How is what you do different from predicting the market?
So actually, I have a few little slides that I got together to go over what spread trading is and to basically break it down a little bit. And I always like actual trades that happen more than just, look at a basic chart and say, well, this is what we would have done here. Also, I think it really it helps explain a little bit better. Now, for some of your audience, they might know what spread trades are and what all of that is, but we might as well go over it at the same time. All right, so one very basic general trade that you would do that's a market neutral style trade that's also a spread trade would be basically a cash and carry. I think this is one of the oldest, longest, really well-known types of trades that you could do, which is basically you're buying the spot market if the trade's in contango, and you're selling the futures market, or you're buying the cash market and then selling the futures. So it's just very basic. Over time, the futures market, when on expiry, will come down to what the spot price is. So you're basically getting in when the price is higher in the futures and then exiting when the price is the same. So who knows? The market is going to go up, going to go down. It really doesn't matter to you. You're going to stay in the trade on both sides, and you're either going to profit from the spot side if the market goes up and then the two converge, or profit from the futures side if the market continues to go down. So you're just capturing the spread in between your entry on the spot or the cash market and your entry on the futures market. So in that, really, execution is key. Let's go on. And in this little one, just to kind of explain and give a little example of what this might look like, I brought up a DOM. This is one that I trade off of. Now, there has to be a little bit of an explanation for this, because some people might not know how this platform works or how this software works. But basically, it's as simple as this. If it's a yellow up triangle, that means buying, and your buy order was filled, or you hit market and you basically were entered at that price. On the right side of the little screen we have here, the down purple triangle is a sell order or a sell fill. So you're going short or you're selling with those. So, and that'll help us for the next example that we have. But basically, this is what a general spread really is. Now, I've really condensed the amount of decimal places that you're able to view on this, but you're basically, as simple as this, we're trying to buy 21s and sell 21.1. Okay, so this is the beginnings of a trade and just starting to enter something, and we're doing small clip sizes to work in, doing it over and over again as we're getting filled. And overall, I mean, one thing is it's like, okay, so you make 0.1 on this or whatever. What is that? That's basically almost 0.5%. Not exciting, really, right? And it may take a few days for this kind of a trade to come back in, especially depending on the market that you're trading. And if it is the traditional futures markets, then yeah, you might wait till expiry. So not so exciting. But what really does make this exciting in another way is doing this on leverage. So if you're leveraging into these trades, I mean, I personally don't use a great deal of leverage anyway, generally between 2 to 4x or 2 to 4 times of a trade. But in the markets that we trade that are, digital at nature, these will come together in, say, a day to 2 days. So making 0.5% and doing that on leverage can be a bit profitable. So that would be a nice trade, generally was for that. So here's actually a little bit more what this would look like when trading a live market that's moving and it's a bit volatile. Now, sorry, in some ways, I do have to block out a little bit of our proprietary information here of how we set up our order books. I mean, it's still really basic stuff, but there's a bit of an edge in that's like, can't give all of that away. But yeah, you can set it up however you feel and however you like on your own. The general premise is basically market's going to go up, market's going to go down, and you're trying to get fills along the way. And you're always trying to buy a little bit lower, sell a little bit higher with your spread. And in the meantime, if these things converge at one point, or you're getting overfilled, you actually get out of those. So on the left side of the screen, we can see there's also some little purple down triangles, right? And so I'm selling there. I'm also buying back at lower prices. So overall, my average price is going to be even a little bit better. On this trade, unlike the other, that was an entry. This is exiting what's left of a position. And basically, we're just trying to do this over and over and over again. Capture these different spreads and trade between these different markets. And sometimes this may be different markets, the same market basically that's on a different exchange, or this might be two different products that are just highly, highly correlated, and we're actually trading more of a stat arbitrage type of a trade. So again, that's more of a professional style overall, but the basics are very simple. And beyond that, I mean, this is the classic Rentech trade that they do, where they are constantly buying one side, selling another, but they're never directional. And overall, I mean, it's one of the best performing hedge funds of all time. And, if they're doing it, which it's difficult to do at their level, but if they're doing it and it works for them all these years consistently, like there may be something there, right? Okay, so then for a longer term kind of position, this is again another position that's being closed. What things might look like over a few hours of trading as the spread comes in, goes out, comes in, goes out, and you're just trying to get advantageous orders off on one leg compared to the other. So we have our left leg on this left side where we are selling to exit this position, and our right leg where we are buying. So you're having to do this again and again and again throughout the day. And then on this last slide, this is where our automated bot basically would come in and do the spread for us. So we can leave it on all day long, 24 hours, and it's basically working out of different spreads across different markets and basically trading the rules and the parameters we've given it. And then we can come back in the morning, and if we've left a bookmap open, this is the kind of thing that we can see. But generally, we look at our overall fills, overall price, overall P&L. But I always like going back and looking at these triangle charts. This is kind of what I grew up on. I know I'm not affiliated with Bookmap in any way. By the way, Bookmap, if you're watching, contact me. I'm not affiliated with them, but yeah, it's a good software. It works in several types of market. I mean, anything from Forex, stocks, futures, really great for futures, to even digital. So
that means your technology must be like really tight to be able to like take these trades, get in, get out, and of course everything is automated there. But do you need any kind of big technology to be able to do that, or a simple computer is fine for this?
now there's two ways you can do it. So very, very simple rules, and creating something on your own, absolutely possible. Absolutely possible. Even our other co-founder of the fund, just out of interest, created his own bot off of ChatGPT that coded him up something in Python that trades for him and does these different spreads. And again, the spreads that he chose were a bit more stat arbitrage. So when two things are just out of on a certain level of a divergence that's abnormal for them, then the trade will enter for him. It's something on a much slower time frame, so it doesn't matter. It's not as crucial to have amazing execution, but to trade in and out several times and to make use of your leverage and to really get as much as you can out of a strategy, then yes, having bots and having an auto spreader that will do these things for you is great. Me and our other co-founder, Dougie, great guy, worked on this spreader for about 2 years. It was a ton of work that went into it for a good amount of time, but to be able to create something that does and is automated and trades for you just really helps us to capture, profits on a more consistent basis. Again, though, coming in without that experience, it's not something that you necessarily have to have. There are plenty of other people out there, and there's other services that also offer auto spreading for you, depending on what industry you're in. So the overall trade comes from the idea. So if you have the idea, there's certain things that you're looking at, and you're looking at different charts and kind of lining things up, and you're saying, okay, here's the parameters that I want to trade on. You can create the trades yourself.
Tell me about the fund setup. So it's one thing to like want to trade on your own, but what about setting up a fund? Is it something you want to do for a long time, or something that you kind of felt like was a good push for you to work on, or where did that came from?
I kind of fell into it because I was trading for other people for a bit, and it was a good experience. Trading others' money gets you to really put an emphasis on being consistent and not messing around in any way, and just performing for them. I mean, you really do take things seriously, or at least I know a lot of other traders that do, once they're, trading with outside capital or more money than they've been used to. So I did that for a bit, and one of the guys I was trading for wanted to start his own fund and basically brought me on from there. So that's how I kind of got connected there. That's Jesse from our fund as well. But what we do that's a bit different now is we do have a fund that's in-house that we can bring on investors. But moreover, these days we are doing what are called SMAs, or separately managed accounts. So we would get the API from a fund, a different fund, or a prop firm, or a high net worth individual, and we actually trade for them. So because our strategies are now automated and all the trades that we run for them are automated, we trade across many, many different multiple accounts all at the same time. And for certain individuals, they may want us to trade certain things. So it's not all the exact same trade going off at the same time. Certain people have different parameters, like, oh, I only want a volatility level of this or in this range, and I don't want to see anything more than a drawdown of X amount. So we're able to kind of, work and tailor around that, which then also creates a different trading kind of opportunity strategy and basically overall profile for that one individual. But it takes a little bit of time, a few weeks of like setting things all up that, their accounts will be perfectly ready and that everything will run the way that they wanted. And basically, at that point, then they can like look into their own account, check how things are going and see how they're doing on their own. And I think with the last year of how things have been, self-custody is one of the biggest things, the most important things for most investors out there, at least. I know it is for myself.
Are these SME easier in terms of like regulations and things, or is it pretty much the same thing?
Yes, in certain ways they are a lot easier to set up and have going in regulation structures, and depending on the country, also depending on how the client has their own system set up. And by doing so, just the overall principle of you're not holding someone else's money and it's not running through a different bank and you're not blah, blah, blah. It's just easier if we make a profit, then they pay us out and that's how we earn money. And if we don't make a profit, then they don't have to do anything and they can quit if they wanted to at any point, and we're not holding their money. So it really helps from the regulation standpoint in that perspective.
How do you go about kind of finding more capital? Is this something you do actively on a daily basis, or is it something where it's more likely that people come to you and invest in your fund? Or
overall, when this year basically started off, it was a hard grind out there. I mean, a lot of people were just not interested in buying into downwards markets overall. But the big thing that kind of put us on the map was the fact that we did perform well, and we were one of the few out there that had decent performance. And then winning some awards like the Hedge Week Award, and then sometimes little smaller podcasts and smaller kind of like news articles that came out, to deal with us that helped get some people to know about us, some word of mouth, I guess, and from their distribution agents. And yeah, that's mostly what we go through now. Is basically someone else will come to us and they have their client list, and they'll say, hey, I think your fund and what you guys are doing fits what this client really wants. And so, hey, do you want to do that for them? And then great, we'll do a call together and kind of set things up from there. But yeah, for the fund, we do run two types of funds or two types of strategies that are available for them right now. We're working on a third right now, so it's not finished, completely available yet, but we hope it'll be all ready in the next 2-3 months-ish. But our two strategies that we go by are, yes, the market neutral and spread trading strategy, and a second that is directional, that is our long short fund, and that is based off of basically going long when the trend is going up and going short when the trend is going down. So it's a lot more of a slower time frame trend following strategy. And again, that's done well. It's usually the trend following really makes you the money overall, and it's the market neutral stuff that kind of brings in something daily or brings in something a bit more consistent. But yeah, I actually used to really not believe in any kind of trend following. It was very stuck in my only don't get directional, just trade in a non-directional way. But now working together with basically Dougie, who set this up, I see the light, and yeah, it's exciting. And it's a lot of fun watching those trades happen.
A lot of people think that because trade automated, that there's like pretty much no work to do on a daily basis. Like things are set up and then you kind of go away, let it run. So maybe kind of break down the misconceptions of this. Like, what are some things that you don't have to do and some things that you have to work on to kind of maintain the success?
Definitely what you have to work on is just, constantly going over how you were filled in the markets, what kind of prices you got in the markets. Was there liquidity at the time that you were trading? Are things running properly? So it's absolutely a daily grind of, going through all the stats. And if there's anything that stands out that just seems off, then you have to really dig into that. But after years of going through that, it's kind of like, okay, something does stand out today. Okay, I know what that would probably be, or where that probably is. Or there are certain conditions that might come along that you want to say, you know what, things are going to get really choppy for us here. We're not going to want to be involved in this. Let's either size down or be very passive with our orders, not so aggressive with our trades. So maybe we're taking less trades or we're trading less volume overall. But yeah, it's just as the markets are constantly random and constantly changing day after day. And so it really does take a lot of discipline staying on top of that. But at the same time, that's one of the real excitements of trading, It's always a challenge. There's always something to be done. And there's never a point where you just completely mastered it. You definitely get better over time, but there's no mastery of it.
I know you're a big fan of journaling and like being self-aware of how you perform. Do you want to kind of talk more about how you do this and what are some things you journal about?
So journaling for me is really kind of the journaling and the review, the daily review of the journals. It was really kind of how I went from struggling for a long period of time to getting a little bit better and a bit better after that and becoming profitable and then taking things from there. But it really came down to, I have 4 years of recorded videos that I have locked away on a private YouTube that I would review each day after trading. And during that time, I was working as a consultant, so my work was very sporadic and very light, but it was great, work that allowed me to travel and also have many free days out of the week. So I was typically trading 5 days a week during all that time. And after every single trade day, I'd go back and review. And that would mean go over every single trade that I took and replay the video for that. And sometimes I have to watch it back again a few times over. And my typical style of trading is to do a lot of trades. I will do a lot of trades for a session. Or if I'm taking a directional position, I'm doing a lot of entries to get a full position size on, and then a lot of exits. So kind of a scaling in, scaling out kind of method. But yeah, to go back and review that, I really wanted it, basically. I really wanted it at the time. I really wanted to be a trader or to basically be consistent. Those are always the things running through my head, my goals day after day. And then I think when you finally kind of get there and everything, it's kind of like, so that's it? Like, okay, like I feel comfortable with the markets. Is that consistency? I'm able to, bring in some money. That's consistency. This is everything. And it's kind of like, okay, you definitely need to have hobbies outside of trading. But yeah, for that time, that was like the hobby and the work in a way. But yeah, still the biggest motivation is waiting for those good days where everything just, is falling into place. You're just taking trade after trade after trade, and it's all gold, right? But those are rare, but exciting. Always definitely a lot of fun.
Cool that you do it on video too. I think video takes more time, but it's a good way to go back on your trades and review them correctly.
Right. And I think another big part of reviewing the trades and taking journaled notes is keeping the notes very simple. Just bullet pointing out what things that really stood out to you on what trades. And being able to go over that at the end of the week and then again at the end of the month, and then you see the same sentence, the same small sentence come up again and again and again. And it really comes down to like, okay, I'm making this mistake consistently again and again. Stop doing it. But yeah, reviewing the videos of my own trading really got me to see like, my blind spots pretty quickly. But just working across different markets and not knowing what strategy overall to trade, that's what really kind of slowed me down a bit more over time. And it also gave me a great experience, being able to now trade in different kinds of markets. So that's cool. That's good. Having a very more well-rounded experience overall. But yeah, sticking to one market for one person would be ideal in the beginning for sure.
Do you still trade manually or not?
Absolutely. I can't get away from that. I cannot get away from that. I don't have to in any way, but it's just, it's the passion, right? So at most though, I would just call it like, at this point, I just call it like practice trades. Like I have a secondary account that I just don't care about. Once in a while, I'll be like, oh, what's the account doing right now? Well, what's the exact balance at? But I really do that specific thing for just like practicing how I'm feeling the market out, and am I making the right trades or not? And I'll get in some practice hours at least 4 days a week, if not, certain markets are open 24/7. So sometimes if I'm not traveling around, I'm here at home and I've got nothing better to do, then maybe 6 days a week, pretty much. But My sessions are really short. I think that's the biggest difference than others that speak of their trading. Sessions for me, like a full session, might be 15 minutes, and then it'll take a little break in between, and then another like 15-minute session. It'll be really exhausting to go beyond an hour. But in what you're trying to do with these kinds of things, you're trying to take a lot of trades pretty quickly and be consistent overall. I think the futures market is really the best for that. If you're trading futures, something like the NQ, ES, something that trades a good deal of volume and trades a lot, and that's good. You can get a lot of round turns there.
So that means you're going at like really low time frames to do that. Is it like a 1 minute chart or?
So I guess this is kind of funny. I mean, again, I bring up Bookmap and I kind of cover the little DOM. The biggest thing for me is really looking at the depth of market, the order book, and trading off of that. So I do use charts, but what's funny is I really just use them for looking back in time and seeing where my trades were at. Again, Bookmap's pretty good for that, for just seeing where your fills were and then being able to rewind where the chart was and see what was going on in the order book at that time. But I'm looking basically at the tape and the order book. So you're seeing the liquidity and the market orders that are actually going through the market at that time. I think there's a ton of information in there that's super helpful. And it is just an overall more professional way to look and view markets. Because again, once you get to a certain level of size, what a chart says, and like, oh, this would have been a great entry. When you're looking at the liquidity, you go, oh, I would have never been able to trade that amount at that price. Geez. So then you kind of run into a wall at certain points. But it is something to look into and get a little bit more used to, especially if you could just start off by looking at a tape, kind of the order tape, what's going through the market, what's being printed at what prices. And in another way, if you can do that and not look at a chart and train yourself to just watch the tape, after a couple of days, you get a little bit better where you can start making small predictions and saying, you know what, I bet 38's going to trade in the next couple of seconds. You know what, I bet 27's gonna print, or it's gonna go down to 21s. And you get a little bit better with that. And then overall, that really will help your trading.
I'll have to give it a try. I interviewed the founder of Bookmap a few weeks back, so I'll have to go back to it and see. Yeah.
Oh yeah. I mean, I've introduced way too many people to that thing. Oh my gosh, it's almost embarrassing at this point. Like everybody knows me as like always talks about Bookmap when he talks about his trading, and it's like when you get used to a piece of software and it's good, then it's like the thing that you always stick with. So I mean, we never developed our own in-house stuff. We have a spread trader, and I'm able to view that through Bookmap, and it's just like, that's all I want to see basically is just, give me my DOM and the order book tape, and then I can see, is something trading correctly or not. So
tell me what your future plans are for the fund and for trading.
So for right now, basically, we've been working a good deal on an options style trade. So we have a few different strategies in there that are all market neutral, but it allows you a bit of convexity. So you're able to do a trade that is very different from what you can normally do in markets, say like if you're trading futures or just spot, by the interesting options that are available in options. So pretty excited to have that going, but it's still in the development process. We're just trading inside funds right now. So we'll be putting that out there in the news at some point. But yeah, look forward to it.
And it's just something I find interesting is like what goals people can work on. Because as traders, like people think they reach a point where everything is done, they can make money, they're good. But you gotta always have different goals and things to work on. So what are some of the things you want to achieve like later on at some point?
Right. I think, trading in the end it's like something you want to grow to be this trader and you want to be great at what you're doing. Yeah, cool. That's great. But then at one point, once you're past all that and you're like, okay, that's my day-to-day work, what's something else I'm interested in? For me, of all things, I would say these days, like kind of like a side goal of like the future where I hope to, or I envision myself being is like, I'd like to start a very, very small scale movie production company, like a film production company. I've always been inspired by that. I was super into film and movies when I was young, and even the very first investment trades and all of that kind of came from the fact that in college I was working on different full-length feature productions, but these were like student films, so they were very small and only went to the little. Oh my gosh, I'm getting a brain fart right now all at once. Sorry, we'll have to edit this part for a second. Oh my gosh, sorry, man. Since I got corona, this has happened several times. I'll be like in the middle of a sentence talking and like, what am I saying right now? Okay, right back to it. So we did the little film circuit route and just showed off our small student films here and there. But ideally, yeah, I would be able to, work together with a few people that are interested on the same thing, and then we make a little production company and do really small scale films, definitely full length, but not something that would play in theaters, just something that would be really simple that maybe would be good enough to go on some sort of streaming platform one day. But, cheap, low budget stuff, but something that's fun, sometimes late at night after work. It's always the greatest pleasure to kick back, have a nice beer, and watch a movie like that anyway. So yeah, that would be like a future goal. That would at that point, I would say I'd made it, when I can just have relaxed life and do some fun things on the side.
It's very cool too when trading is able to kind of pay you for doing other things. They pay you to like work on other projects, do other stuff you care about. That's the best feeling. So
yeah, absolutely. And really, I mean, the biggest thing with trading for me and kind of why I decided to do this as a job and as work, and the idea of being able to trade my own money and make money from that and be free, be completely free and have freedom. That's great. But some people do ask like, okay, why don't you just do that? Why don't you just trade on your own? And it really comes down to the fact that if you trade your own money, great, good for you. You can make a living out of that. Sometimes you can make a really good living. But if you're trading for others, that's the best way to grow wealth. Truly. I mean, there's several people that I've seen in the past, in a short period of time, say over a month's period of time, make enough to where if they were trading on their own, that would have taken them a lifetime to make. So if you're able to do that and you're able to get to the point where you're trading, not as even the best trader in the world, but just a good trader, a solid trader and very disciplined, then you can start working for others and really take it from there. So,
yeah, definitely a good point there for sure. So when can people connect with you or find out more about your work that you do outside this podcast?
Well, one, you can find me on Twitter, obviously at Andres Trades. I have almost like no followers. I should have more, I guess. I do post out on there about once a week, a couple of times a week or something. But yeah, you can definitely connect with me there and see old posts going back from a long time. Another is directly sign up for my email listings that I have and just sub there. Through that, I've been able to send out like new videos that I do, or if there's something out there like an article or something, then I definitely send that out. I usually keep it towards trades and trade related. So it's like hopefully helpful and tips and just better ways to trade overall, or the style and strategies that I'm trading. Then, and that's my website. I guess you can give a link to that. Then through LinkedIn directly, I've had the most contact directly through LinkedIn. Again, I'll give you the LinkedIn, but it's basically just my name and then search for that. And yeah, so those are the best options. Or if you're ever out here in the south of Korea, drop on by and give me a shout out. I used to live in Seoul for a little over 10 years, but I just moved down to the southern city of Busan. It's amazing out here. I mean, you've got beaches everywhere. You've got these amazing mountains. So anyone ever out in Busan, then there you go.
I'll check it out on there for sure. And yeah, we'll definitely put the links that you mentioned in the places people can contact you in the show notes for the podcast. People can go directly there and contact you. And Andres, I appreciate your time here. It's good to see guys doing stuff like you do and kind of making it happen with the funds and the trading, kind of teaching as well on the other side. I appreciate that. And hopefully we can catch up soon and kind of see other stuff you're doing.